Welcome, dear traders. As expected, the release of the FOMC meeting minutes has driven up markets. Traders found out that the Fed would raise the key rate twice in June and July. On May 3 and 4, Fed policymakers anonymously voted for a rate increase by 50 basis points. However, market participants predicted such an outcome. To some extent, the minutes provided well-known information without dispelling some disturbing rumors. Let's discuss the main highlights of the Asian session. In its meeting minutes, the Fed once again stressed that the U.S. economy remains strong. It fueled optimism on Wall Street. On Wednesday, the U.S. main stock indexes closed in the black. The S&P 500 and the Nasdaq advanced amid a rise in Amazon and the Tesla shares by 2.6% and 4.9% respectively. However, after several weeks of sharp volatility, stock market sentiment may change very quickly. In today's Asian session, Wall Street optimism has already waned. Even the relatively stable Dow Jones also followed the general downtrend. Investors fear that the global economy will eventually be hurt considerably by galloping inflation. Analysts believe that rising consumer prices may be somewhat beneficial to the Fed. Financial conditions are tightening because of a high inflation, and the US dollar is steadily growing, while stocks are lifting lower. Moreover, traders remain cautious due to rumors circling in the market that the Fed may abandon its hawkish stance. In fact, the regulator may even take a break in their current hawkish cycle this autumn. In the minutes, the Fed did not make any hints about it. The meeting minutes did not debunk rumors about opposing a policy tightening after two more half-point increases in June and July, so the US dollar remained flat. It has hovering at its previously reached levels. After a short-term retreat on Wednesday, amid mounting risk appetite on Wall Street, the greenback was consolidating around a monthly low of 102 today. The US dollar index, which measures the strength of the currency against the six main rivals, was trading in a narrow corridor of 101.94 and 102.27. The meeting minutes did not contain anything new. Treasury yields fell from a multi-year highs. The euro declined from a one-month high against the US dollar today, and besides, risk on sentiment has returned. All these factors facilitate the growth of the greenback as a safe haven currency. As seen on the daily chart, the index slid to 102.06. Nevertheless, demand for the safe haven assets will be beyond amid the current risks to global economic expansion. Yesterday, the US dollar and the yen as the safe haven currencies slightly weakened due to a renewed risk appetite on Wall Street. However, fears of a recession have not gone away. They continue to affect investor sentiment, and this is bullish for the yen. Apart from that, the Japanese currency is extremely sensitive to changes in the bond market, so it climbed higher following a fall in the US government bonds from the multi-year highs. The greenback, on the contrary, rises amid a rally of US Treasuries. As a result, the dollar-yen lost ground. During the Asian session, the pair was fluctuating between the support level of 126.52 and the resistance level of 127.58. At the time of preparing material for this video, the pair was trading at 126.68. In the short term, the downtrend looks more likely. Risk on currencies gained momentum amid a drop in the safe haven ones, including the US dollar. The Aussie approached a high of 0.7010. However, it had to retreat shortly after as risk appetite began to wane. Internal fundamental factors were also negative. Traders were disappointed by weak data on the private capital expenditure in Australia for the first quarter, and the report published today revealed that the total new capital expenditure fell from plus 1.1% to minus 0.3% in annual terms. If the figure turned out to be high, it could be one more signal for the Reserve Bank of Australia to raise rates more aggressively. In turn, it would be quite bullish for the Aussie. Yet it did not happen, and the AUD-USD pair tumbled, moving in the intraday corridor of 0.7057 and 0.7110. At the time of preparing material for this video, it decreased to 0.7088. And we hope you are having a winning streak with your trades. Perhaps our video reviews contribute to this. And that's all for now. Feel free to leave your feedback and see you soon.